In this video, we'll be covering what a DSCR loan is and how you can use one to buy more real estate. Hey, what's up? I'm Mark Terbolini, and I'm all about achieving financial independence through real estate investing. So if you're interested in real estate investing and achieving financial freedom for yourself, be sure to hit the like and subscribe button down below, and you will not miss a thing. There are many different ways to finance real estate, and most people start with traditional financing. And this is a great way to go about it, but eventually you will run out of money or you will not be able to buy more properties because you're limited to the number of properties you can purchase. So this is where a DSCR loan comes in handy, and what that stands for is debt service coverage ratio. This type of loan allows borrowers to use market rent to qualify for the loan. So this can be actual rent or future rent that you anticipate. And this can be used on long-term or short-term rentals. So it can be just like your traditional rental or like a short-term stay, Airbnb or VRBO. This loan type also does not require a DTI or debt to income ratio to qualify. Your income does not matter. So let's say your DTI is really high because you own multiple properties, you can continue investing with a DSCR loan. So to qualify for a DSCR loan, you need two things. And the first being you need a credit score of above 640. The second qualification is you need a DSCR ratio of 1 or higher. And we'll get to how to calculate that in a minute, but they will use market rents or tools like AirDNA to determine your ratio to see if you qualify. To calculate your debt service coverage ratio, take your annual net income, that's your income minus all expenses, and divide that by your annual debt service. So for example, let's say you own an Airbnb that makes $100,000 a year in net profit. And let's say your expenses are about $5,000 per month. What you would do is multiply that by 12 to get $60,000. So you take $100,000 net profit divided by the total debt service, let's say $60,000. You get a ratio of 1.6, which is higher than 1. So anything above a 1 qualifies you for the loan. Anything below a 1 means that you're negative cash flow and you do not qualify. Okay, to wrap things up here, I want to go over 6 benefits of a DSCR loan. And the first being, like I said before, that there's no income requirements. So you don't need to have a specific DTI or debt to income ratio. What happens a lot of the times is people will invest in real estate, max out their DTI, and then they're done. So this way you can get around that and continue to grow your portfolio. The second benefit is many lenders will use 100% of gross rents to help you qualify for the loan. Traditional lending uses 75%. So let's say your rent is $1,000, they will take into account $750. So with a DSCR loan, you can max that out to 100%. The third benefit is many lenders allow up to 80% LTV or loan to value. So you can go out and put down 20% and you can purchase the property. And some lenders actually allow up to 85%, which means you can put down 15%, which means less cash out of your pocket. A fourth benefit is I've seen 30 and 40-year mortgages. And so what that means is that you can go out and buy an expensive property and keep your payments manageable. The fifth benefit is you can finance up to 20 properties. With traditional financing, I believe it's up to 10 properties. But I've heard that it's difficult to actually finance, up into a higher range. So once you kind of hit that wall where lenders start turning you down, you can switch over to DSCR loan and continue investing. And the final benefit I've seen is that you can finance properties up to $2 million. So if you find an Airbnb that is perfect and it's worth like $1.5 million and the numbers work, you can actually go out and buy that property, and as long as you cash flow, you can get a loan. So to wrap things up here, if you are using traditional financing and you have hit the wall and you cannot invest anymore, a DSCR loan is a great way to continue growing your portfolio. So if you like this content, be sure to like and subscribe, and I'll see you in the next video.